All right, in this lesson, we're going to talk a little bit about the auditing profession. Specifically, we're going to be talking about the different types of auditors you may encounter as someone who is looking to become an auditor or as someone who has to work with auditors in their organization or their companies. So let's look at the 4 different types of auditors that you might encounter. The first one is the one that we're going to be talking about a lot in this course, and that's external auditors. Now, these external auditors are independent auditors. They are not employees of the entity being audited. Now, their job is to express an opinion regarding the presentation and fairness of the financial statements. At the end of the day, CPAs are the only ones who can sign off on the opinion. So internal independent auditors are not employees of the company or the entity that they are auditing. So what happens is you have a company who hires an external auditor who is independent of the organization and their employees. They come in, audit the books of the organization, and then express an opinion. These auditors that come in to audit this organization are not employees of this organization. They are paid and are employees of the accounting firm that hired them originally. So external, meaning outside, independent in fact and appearance of the organization, preparing the audit or auditing the financial statements of the organization to evaluate the presentation and fairness of those financial statements in accordance with U.S. GAAP. Okay. Now, CPAs are the only ones that can audit, that can sign a finalized opinion of the fairness of the financial statement of the organization. Now, a CPA doesn't have to be the only one that works on the audit. So, in a big accounting firm, you're going to have staff or assistants. Then you're going to have a senior, and then you're going to have senior manager, and then partner. From a broad perspective, the partner needs to have a CPA because they're the ones that are going to sign off on the entire audit. Now, the assistants that are down at the bottom typically don't have a lot of experience and are doing a lot of the easy work, but typically they're still working on their CPA exam or CPA licensure. And so, because they are not CPAs, it doesn't mean that you cannot do the audit. They're okay because they have different levels of supervision ultimately signed off by that partner in charge. Now, in some organizations, they will require you to have a CPA license before you graduate to the senior level. So before you're promoted, you must have a CPA license. Otherwise, you stay as an assistant or an in charge. Again, this differs by organization and organization. The one that I worked for, that's how it was. And for a lot of the firms that I've seen, that's how it is. But not every organization is that way. So giving you kind of an understanding of the CPA requirement. So you must get a CPA license if you want to sign off on any audits. All right. From there, we have our internal auditors. Internal auditors do the same function as external auditors, but work for the entity they are auditing. They do assist in external auditors' work. So internal auditors, what usually happens is a lot of people who are external want a little bit better routine in their life as far as work hours is concerned. So a lot of times you see them going into internal audit. But basically it's the same thing as external audit, except for that internal auditor, they're hired by the organization themselves and not they're not independent from that organization. So, if you are company B, you hire internal auditors. And why are you doing that? Well, you're doing that because you might want to get ahead of the external auditors when there comes issues in the organization. Maybe it's a good internal controls to make sure everything's working in the organization, so that's why you have internal audit. Maybe it's just cheaper from the overall audit perspective. If the external auditors can use some of the services of the internal auditors, it saves you a little bit of money at that end of the day. In addition, internal auditors are like the internal police. They alert the board of directors and the audit committee of issues they find, and typically if you have a good internal control organization, those internal auditors are separate from management. Therefore, if there's any issues that they find or fraud or errors, they can go straight to the board of directors and the audit committee with that information instead of having going through management. Because if management is perpetuating that fraud, we don't want to alert management. We want to alert someone else who can help fix that or terminate people, and that would be the board of directors. More about that later on. Now, government auditors is our next one. Government auditors is a type of internal auditors in some respects. They are employed by a governmental agency, either federal, state, or local. One example is the Government Accountability Office, the GAO. They're in charge of expenditures for the federal government and auditing those, not just internally, but externally as well. And then the Internal Revenue Service is someone you know from doing your taxes. The Internal Revenue Service audits organizations, businesses, and people that pay taxes to make sure that they are appropriately remitting the taxes that they need to and then filing the associated forms. So those are governmental auditors. And then lastly we have is forensic auditors. Forensic auditors are some of the newest auditors you can say on the street, although they've been around for for a very long time. Forensic auditors are kind of like external auditors, but because of the fraud that was happening in the organization and the perpetuation of that type of fraud, forensics auditors come in and try to sift out that fraud and try to fix or deter or detract from fraud happening within an organization. So they're specifically trained auditors who investigate fraud within an organization or company. Now, there's a lot of work that goes into that, but basically it's kind of like an investigator in a crime scene. That's their job, is to go in and try to find if the fraud, or if they're tipped off on a fraud issue, go in and see what's happening with this fraud, where did the money go, who's stealing what's going on there. So that's their job in that. So the crew, in the audit profession, we've got external auditors, internal auditors, governmental auditors, and forensic auditors. So this lesson was just to give you an overview of the different types of auditors that you are going to incur if you are in an organization hiring auditors, or if you're an auditor yourself and you're looking for the next phase of your profession. Hey, thanks for watching my video. If you like what you saw, make sure you press the thumbs up button that's right below here. If you have any questions, make sure that you leave a comment or that question in the comment box below. And if you haven't subscribed yet, make sure you press the subscribe button. It's just below me. Hey, if you want more videos like this, make sure you go to www.patrickleemsa.com to see more videos like this, or if you just want to learn more about accounting. Thanks for watching. We'll see you in the next video.